I'm Matt Kadnar from the Nebo Wealth team. We want to take you through a use case today for a fictional client, Tim and Sue Jones. But we're going to actually start right here with the denouement, the perfect fit portfolio for Tim and Sue, given where they are in terms of their time horizon, their risk tolerance, what they need from their financial assets, the target return that embodies all those needs and goals, the particular portfolio constraints, as well as the capital market assumptions from our fictional advisor, resulting in the perfect fit portfolio given all of those circumstances. So how do we get there? Well, we got there by going through Nebo Wealth's five-step investment policy process. So going back to the beginnings. So we have a time horizon, risk tolerance, cash flows, legacy, and target return. So the time horizon for Tim and Sue, they're both currently age 55. They anticipate retiring at age 62. They have longevity of 95, and they have 3.1 million for current wealth. For risk tolerance, what Nebo wants to focus on is what's the max loss that Tim and Sue can tolerate. And we take that max loss and we translate that into a constraint for the portfolio, either a max in stock or a max portfolio volatility. When going through the Nebo Wealth investment policy process, we tend to at first run this process unconstrained, see what the perfect fit portfolio is, and then layer in the constraints to illustrate whatever tension there may be between the long-term wealth accumulation goals of the client and their short-term drawdown concerns. So with time horizon and risk tolerance set check, next we'll go to cash flows. So here we're using Nebo Wealth's fast track or simple cash flow models. We make an assumption with respect to savings. We make an assumptions with respect to the withdrawal, growing at a rate inflation, beginning and ending at retirement. These numbers are all editable. We also have a more enhanced cash flow model, which allows you to be more granular with respect to the cash flows. And then we also can import cash flows from financial planning tools. But here, just sticking with the simple assumptions. And then we did add a wrinkle. So Tim and Sue, their goal is to retire, buy a ski condo in Utah. They're snowbirds. uh, you know, Unlike they can't stand the Florida winters, they need that Mountain West snow. So here we have them buying a ski condo for 750,000 at age 62. This other column here is editable, so it does give you some flexibility with respect to cash flows. But with the cash flow set, we'll move to the target return. So Nebo calculates the minimum return necessary in order for Tim and Sue to achieve their goals, 2.2% after taxes, fees, and inflation. That is the minimum target return or the minimum IRR that will make this plan work. Basically, Tim and Sue will end up at longevity with zero in assets, basically bouncing their last check. Now, that may be a bit too close for some, so Nebo allows you to play. You can come down here, and you can set a goal. Do you want to have $1 million? Oh, $1 million in real terms at longevity for your kids? What's the target return necessary in order to achieve that? And it's 2.7 real. You can also specify returns or withdrawal rates. So there's flexibility for Nebo in terms of using a goals-based process or a possibilities-based process. But if we're satisfied with the legacy goals, cash flow, time horizon, risk tolerance, then we can build a portfolio. So here, Nebo is running its multi-period shortfall optimization to produce a portfolio that's a perfect fit for Tim and Sue, given all of the investment policy process that we just went through. So 48% in stocks, 13% in liquid alts, a little sliver of cash, and then the rest in bonds. On the allocation tab, where we started, we can also layer in some additional constraints in the portfolio. There we go. Some additional constraints. We can add asset classes. We can add mins and max constraints for all the portfolios. And then we have the capital market assumptions down here that are all editable. And then the implementation over here to the far right, again, all open architecture. So in a couple minutes, we can take Tim and Sue from basic information all the way to the perfect fit portfolio.